right, welcome back to the channel, everyone, and thank you for tuning in to another video here. We're looking at the E-mini S&P contract right now. I'm still in the December contract. I'm going to roll over today. I'm taking a quick long back to the upside to fill in this area right here. This is an area of basic supply, but we haven't broken any structure really to the downside, but this is a supply area right here. I'm looking to take it back up to 4609 and a half. Hopefully we go up there. Again, this is off of the ES futures. I took a nice trade on the NASDAQ 100 futures. Short bit ago around 9 o'clock this morning. Posted that over in the Discord. So if you're someone that's interested in joining our Discord community, you might want to go over to the Discord and check us out over there. That's where we as traders come together and we post our trades, post screenshots of our trades, discuss our trades. For those that may have questions about certain trade entries or trades that certain individuals take, come over and join us, okay? Maybe you have questions about the future markets. Most of us trade the index or indice futures, like here, the NASDAQ 100, the ES. I'm trading the ES futures. Maybe you trade the micros. It doesn't really matter, okay? Come over and join us. You can find that link down in the, the description portion of the video below. So, yeah, so this is what we're doing this morning. We're trading, looking at here at the, trying to take this trade back up to this area here. So right here at this high volume node, and I may go ahead and take out right here at 6 points just to go ahead and just take out. I'm probably gonna close the trade here. Yeah, I'm gonna close it right there. It's fine. So I picked up like, what is it, 5 3/4 points, maybe roughly 6 points right there. The high volume node, I think it's going to come up here and test this area right here. But either way, that was a solid trade for the day. Second entry, I took actually a trade on the, going long on the NASDAQ into the overnight session. I'll show you that. That was during the Asian session. So I took one trade long into the Asian session overnight, and one trade going long, okay, because I saw some follow-up or continuation to the upside to an area of supply as well on the NASDAQ. And here, taking this trade here, tapped into this area of demand off the 12 range chart going long. Now, if you look at the higher time frame, you can see on the ES, again, I'm switching my contract over probably today and looking at volume and starting to pick up into the March contract, March 24 contract. So what we see here is the market making higher highs and higher lows. You can see it's breaking structure as it's making higher highs and higher lows, from prior days. So making new highs, pulling back. Breaking structure to the upside right here. This was, I think, on Friday. Pulling back. Breaking a little area structure back to the upside right here. And then it pulls back. So what I did was around 4,600. So what I did was I basically moved down to my lower time frame, my 12 range chart. This is that area. Not only is it a round number, but it's also an area of demand on the lower time frame. So when I saw it rejecting this area, I was looking at what was above here, and I noticed that we had this area of supply resting right here. I said, okay, the market's probably going to want to try to test that area, and it did. So it has not tapped into it yet, but look, it's already up there like at what, 4608 and a half. We're talking like a point and a half from being there. So it's probably going to hit that area, I'm pretty sure. But it may pull back a little bit before it pushes up. So we'll see. But anyways, I had 3 solid trades with two in the session. So, well, not even say 2 in the session, but 1 pre-session, okay? 1 into the session because the market just opened up here on the ES, and then 1 into the Asian session. So far it's been a good, solid trade entries for me as of right now. But this is what I do each and every day. I trade supply and demand. I mean, to me, that is it's the cornerstone of how I trade. Look, it works. I mean, because if you think about it, what are you doing when you're trading and getting into moves where the move started, especially where they're aggressive pushes or moves in the market? This was an aggressive move right here. You get all these green candles to the upside, breaking this area structure to the upside. Where does it pull back to? This key area of demand right here. I'm going to go ahead and mark this so you guys can see, and just for my own sake, this right here was a demand zone. Let me mark it. All right. And I like to mark my zones if the demands in green. Okay. And the aim would be up here for this area of supply. Okay. So you could have got in earlier. I got in late, was waiting for the market to really open up because it tapped the zone really at 6:30 this morning. Could you have taken it long if you saw a setup here? Yes, definitely so. Look what we got. We got a nice bullish candle here. You can wait for the close of the candle in the opposite direction right here above 46.04. Take your trade, go long. You would have been up probably about 3 points there, 3.5 points before it pulled back, right? Coming back primarily probably, well, if you got in here at 46.04, it came back, right? Maybe 4 points. But you have to understand, guys, this is how the market's going to move. The market's going to move like that to scare people out of their trades, to stop them out so people can lose money. This is your demand zone. Again, I talk about areas where you can place your stop at. Now, if you're someone that's, that's pretty serious and have the size capital to be able to trade and weather the storm, you can put it back here at the back end demand. I wouldn't recommend that for someone who's very conservative, more conservative, and has less capital to trade. Pick an area. This would be wherever you get in right here. Say for instance, this was the break of the candle to the upside. You got in here maybe at 46.04 and a quarter or half, right? Well, maybe put your stop, maybe halfway through the move that occurred right here when we got this bullish momentum to the upside. Maybe 2.5. You would have got stopped out there though, okay? So for me, the best place is once I see this bullish momentum to the upside here and I see the break and close of the candle above the last down bearish candle, I would put it below here at 45.99.5, and that would be like an acting as an area of support, okay? All right? But put it a few ticks maybe below because they're going to run that. Look what they did. They came down almost to the tick. One more tick, it would have been right there at the low, okay? 2 more ticks, and they would have stopped you out if you'd have put it, kind of butted up right at the back end of this wick right here. So give yourself 3 or 4 ticks breathing room because sometimes they will come down and swipe that area right below this area of support, and that's when you're going to put your stop loss because the fact is they know traders are going to put a stop right there, and they want to, take your money, all right? Stop you out. So just understand what's going on there. The game and how the banks and institutions play is the fact is, if you ever heard the saying, someone's got to lose before someone can actually win? Well, you want to be on the winning side and understand, that game of chess, the moves that they're making. So you want to play with them, okay? All right. So if you didn't get to the trade the first time here, when it pulled right back here, there'd have been another opportunity, okay, to go still long because there's still area that the market has to fill back up to the upside. So I'm thinking that it's probably still going to come up here and probably test around the 10 area, okay? So we'll see what happens. Again, it may pull back. But, so I just kind of sharing my trades with you guys today in discussion of them, or explanation, letting you know why I trade supply and demand, how I trade it, and what I look for, okay? That's what it's about. This is the demand setup. I'm looking for rejection. I'm breaking the candle in the opposite direction. Taking it, in this case here, I see an area of supply resting right here at the top. So I'm going to aim for that, okay? All right. Now, a trade I took on the NASDAQ this morning, which is posted on the Discord, I actually took it into the December contract. I just rolled over my NASDAQ and to the March 24th contract, okay? But same general setup right here. It's the same thing. It's just, price is different, whatever the case is. But anyways, so what it was is basically a demand setup, okay? We have the market was making higher highs and higher lows, okay? Breaking structure to the upside, broke structure right here, and high, higher low, broke structure. Now, let me talk about this area right here. All right, so this was a demand zone, okay? Now, is it tested? Yes, it had already been tested. I'm gonna explain why. So, because I know there are people or individual traders that are having a hard time when we talk about gaps or voids in the market, okay? Back at the demand or supply zone. In this case here, at a demand zone, okay? Now, look, let me blow this up, okay? Before I get into the trade. When you have the market make a high, pull back, and then break structure to the upside, this is these are demand areas right here. This is areas of demand where aggressive buying is coming out of here, down here, and down here, okay? Now, right here, okay, take a look. When the market pushed up and pulled back with this red candle and broke higher right here, I'm going to take the box away. The first candle that broke above this last bearish red candle, this little swing to the upside right here and took it out, okay? Look, it broke above it, right? That candle there broke above that green candle broke above that red candle. The next candle right here, all right, take a look what happens. It doesn't just immediately push up and then close with a small wick below. The wick of it is a long wick that comes back and it fills in or taps into where the aggressive buy-in took place to break above that last bearish candle, which is basically breaking above the area of demand, okay? And then it pulls back and it taps the demand zone. So that's why I talk about the closure of coming back to fill the void or gap back at the demand zone. So when that happens, okay, that makes the trade or the area low probability for me when looking for a trade setup, all right? Now, the thing about this setup, just as it did right here, let me show you right here too, okay? See this right here? This is another aggressive area buying. This is a demand area, right? But the last bearish down candle within the small swing, within the swing here, that red candle there, this candle here broke above. That bullish candle broke above that last bearish candle to the downside. The next candle right here, look, long wick that pulls back to the demand area, okay, where the last red bearish candle was broken above, it came back right to it and filled in any small area. Sometimes you'll see a gap, okay? Maybe this candle here close to the upside with a small wick at the bottom end of it. So then you have a gap or void from this area here to the little bottom end of the, excuse me guys, the wick of that candle, okay? So be a small little area or gap. So that's what I talk about when I'm talking about high probability setups, where there's a gap or void, okay? This case here is not, because the wick end or the tail end of the candle comes back to the top end of the red candle, okay, and closes in that area. So again, making it low probability here. Does that mean the market will not reject that area? No, it does not mean that. It can still reject it. All right. Also pay close attention here. Now this was the zone right here, right? I marked this. Now I want to mark this as purple, okay? All right, instead of green. Green signifies to me high probability zone. So let me mark this as a magenta zone, okay? Now what does that mean? It means tested zone, and we have what back here? We have an imbalance within the zone. I've talked about this in multiple videos. Please watch the videos, okay? All right. Sometimes you'll see imbalances when we're trading with range-based charts. Lots of times you'll see imbalances within the demand or supply zone. We know, and you should know by now, the market is going to do what? It has to fill in all those areas of imbalances at some point. Now, this was a prior demand area. There was no gap or void because it had already pulled back to it. But when the market comes back to this area here where there's an imbalance resting at a prior demand zone, okay, all right, or which this is a low probability demand zone, you still have to be mindful because it can reject that area because it can bounce from that imbalance once that area is filled in, okay? Look what happens. When I saw that, as it was coming back to it, let me do this, okay? Coming back to it, I got interested. Why? Because I'm looking at price action as it's coming back down too. Here's an area of supply resting right here above here. That's why I had this red line here, and I had it, you know, that's what I was aiming for in my trade. That trade is over on the Discord community. I posted it and shared it there. And I think it was like a 15, 16 point trade I took right there. Comes back to the, you know, demand area here, low probability demand area, but we have an imbalance, okay? So I'm waiting for it to reject there. This is nice bullish candle right here with that long hammer, okay? The market came in, it didn't close deep into it. It came in, it went deep into it, and then boom, closed to the upside. So you could have been bullish right there. Not bullish, I'm sorry. You could have went long right there if you chose to, or maybe even wait for the break of the candle to the upside. Oh, I'm sorry, guys. This is 60 range chart. What am I saying? Well, if you trade higher time frame charts, you could have. But what I'm trying to say is when the market taps back into this zone right here, we want to move down to the lower time frame chart, right? Okay. This is part of the strategy when I talk about using multiple chart confluence. So this was a demand zone on the higher time frame. I was not looking at the 60 range. We are in the 60 range. The trade was centered and based around that because we had an imbalance back at the 60 range demand zone here. Okay. Now this is my higher time frame. What I want to do, you guys know that have been following the channel by now, is move down to the lower time frame chart. So I'll move down to my lower time frame chart. I'm going to show you here in a second. Just I want to kind of make sure. Yeah, supply up here. Okay. Supply on the higher time frame. So let's move down. All right, let's go to that area. Where's it at? 258, 259. Okay. As I said before, this is going to be, you know, the type of trade you get into that you probably want to try to hold or take it back up to this area of supply, right? All right. So let's say you got in here. I'm going to move down to the lower time frame, somewhere in this area here, okay? And it pulled back. But if you were into this trade down here and took it up to here, so, I mean, you probably at least picked up 10 points at least, guys. I'm sorry. 10 points to the upside, all right? Or more, okay? But you have to understand from the biggest standpoint, from a bigger time frame chart or scaled up chart, whatever, that what the ultimate goal is, you know, the market's trying to do is trying to accomplish by reaching this area first, okay, before it makes its next decision what it wants to do, and it continue pushing higher, all right? And I can tell you, and I can look to see why it wants to do that. But my aim in trading, because I'm a scalper, is at least take it back up here, right? Not on the higher time frame or the lower time frame, but I'm using my higher time frame as a guide to tell me where I need to go, okay? So you get into the trade when you notice rejection, all right? We talk about the rejection on the lower time frame chart. So it's multiple chart confluence, higher time frame markup, mark the zone, then move down to the lower time frame chart to look for the entry to take it back to some key area and hold it through on to an area of interest on the higher time frame chart. Now again, it comes back here. You have to make a choice at some point when the market starts moving up where where you're going to get out at. Look at the lower time frame chart, looking at price action, then you can determine, you know, those areas where to get out at, okay? For me, you know, when I see something like this and the market starts pulling back, especially in the lower time frame, I'm probably going to get out. But it's like you almost want to hold it through because you know where the market's going to go. But they're going to play this game because the market does those moves where it has its ebbs and pullbacks, pushes and pulls, pushes and pulls. It pushed, it pulled back, okay? And then it pushed. You have to understand it's going to do that. They know that traders, retail traders, have their stops resting below this area right here. So they're going to aim for you. All right? They're going to aim for you. They never broke below the demand area. All right? But you have to have the capital if you're going to weather that storm, again, to put your stop loss at the back end of this area of demand. Okay? Most times you want to place it around some area of support on the lower time frame from the point in which you enter the trade at. Okay? All right? And I talk about that in multiple videos. So, anyways, what I'm getting at here, let's move down to the lower time frame chart because now we're talking about at 258 area, which was, or 259, right here, okay? So, let's blow this up a little bit, okay? And I don't think I got into my trade. Let me take a look here, over on the Discord. Sorry, guys, because I'm trying to look at the Discord as well. Yeah, see, I didn't get into my trade. Not during, you know, in this area here when the market pulled back. That was around probably the opening yesterday evening. Shortly at midnight. Around midnight. About 1 o'clock in the morning. So, but either way, once it pulls back to the higher time frame demand, what are you looking for? A demand setup on the lower time frame. As simple as that. So, the market pulls back. It's that pullback on the higher time frame. Okay. We look for, what do we look for? We look for a break of structure in the opposite direction. Boom, the market breaks up. It breaks structure, small area structure right here, okay? Definitely does so. So you wait for a pullback, maybe to pull back to, it could have been here, but this is a low probability area of demand. We do have an imbalance there. It could reject there. Let's see, down here, another low probability area of demand. So either one of these areas, because they have imbalances back at the zone that haven't been filled, if it rejects, then we can look to go long, all right? If you're looking the scalp, all right, it comes back, fills the imbalance right here, the small little area imbalance right here within this swing right here on the pullback, okay? Fills it in, rejects it, go long, where? Back up to at least this area up here around 275.5. So maybe you got in, let's say you got in, let's see, pushed up here, pull back. Maybe you got in right here at 268.5, all right? Okay? Or maybe a little higher. Either way, if you're taking it back up to 75, you could at least pick yourself up an easy 5 points right there. But then they give you another opportunity as well. It pushes lower. Down here, another area of demand. But, you know, right here, it's another area of demand. But look at this, a small area of demand here. With the market pulled back to it though, okay? But we have an imbalance resting right here. Back at the demand zone that is unfilled. So, the market rejects that area, okay? Now, this area right here is a supply area. I would definitely take the break of the candle back to the upside here at 267 and be aiming for this area here at 74. Now that's 7 points right there, okay? That's 7 points that you could have picked up really easy right there, all right? And the market keeps running high. higher. So you could just scalp that right there, or you could have held it through is what I'm trying to say. Now, if you were someone that was trading around that time of the evening, you know, or into the early portion of the morning. Now, my trade, I didn't take my entry until around 8:50ish, 9 o'clock this morning, okay? So it was around, let's see here, the market actually pulled back right here, as you see on the higher time frame. So that rejection, when I was talking about the lower time frame, there would have been an opportunity to take a trade here. Pushes up, boom. So what did it do then? It came back down. And they do this from time to time. You know, it comes back down. It tests the demand zone again. They weren't finished, but what they were trying to do was stop traders out down here. All right, stop them out to push the market and up, okay, because we're already in, you know, a bullish mode because we're tapping into a low probability demand zone, but we have an imbalance there, so we should know that it could possibly reject there. They pull back to that area of demand again, okay, where that imbalance is resting at, all right? Okay, if we get the rejection, we don't see where it broke below. It definitely didn't break below the area of demand. It rejected that area again with a nice bullish candle to the upside. Momentum coming back into the picture, into the picture. So what you can do is look for another demand setup on the lower time frame, and this time around to aim for the area of supply here. Okay, so look, this was that pullback right here. You know, you look for some area of a demand setup. Okay, all right, and it may not be the first one. You know, the market is more likely going to aim for that area. So when it pushed, it rejected it at 6:30 this morning on the pullback, as you saw on the higher time frame chart. Okay, this is that pullback on the higher time frame. Breaks up, pulls back. Breaks higher, pulls back. Okay, six something this morning. If you were trading, boom, right here. This is where you could have got in at. Then the market just continues running to the upside. So the key at that point is to, if you didn't get in, you know, at this demand zone, look for another demand setup to take the trade and keep it going to the upside, all right? And that's what I did. I looked for a demand setup in the continuation of movement to the upside on a pullback to take it up to this area here, okay? All right, this area of supply. Beautiful trade. Now, you know, if you didn't get in here, you know, because you weren't up trading at 12 o'clock in the morning, 1 o'clock in the morning, Eastern time, and then it pulled back here and gave you a second opportunity, this would have been the golden opportunity to get in. If you didn't get in here, it pulls back again, basically back down to this area again, all right, around 270, 271. Look for a setup to go long, and this time hold it, okay? If you could get into a trade and hold it in this area right here and take it all up to 305, then you were good. You were solid, all right? So that was a beautiful trade going to the upside. When you have to see these type trades unfolding on your charts, all right, that's what I'm trying to say. All right, I'm switching back over to the ES. Look what happened. Remember, I know beginning of the video I said that 10 area, right? It went right there, okay? You got to understand what's going on here. High, higher low. Breaker structure, pull back to a key area demand on the 12 range, go long. This is a supply area right here. Take it up there. Simple as that, okay? All right, sometimes you're just going to have to hold it through, though. Because, look, like I said, if you would have got in this area right here, it goes up, pulls back. You have to understand the game that's being played. It's going to be up to you to decide how long you want to hold that trade and take it and where to take it to, okay? All right, I try my best to hold and looking at my higher time frame to see where it could actually go to. This case here, we're looking at the lower time frame, and it's even better because if I'm taking a trade off my lower time frame and I have a supply set up, just as I showed you on the higher time frame on the NASDAQ, the same thing. I'm going to take it there. The same thing. It's just about being patient, looking for the right setups, okay? And then just practicing it. That's all you got to do. So, okay, I haven't really looking at the session since it actually, the U.S. session since it opened, sorry. All right, look, I missed this right here. That was a trade right there, okay? Look, this is on the 60 range chart. Where my lines at? Do I have any on here? Okay, let's go up here. Let's bring these up to the top here. All right. Okay, so let's All right. Okay, here we go. All right, high, low, breaker structure. Right at the opening of the market, it broke structure to the upside. Took out this area right here. Demand zone, aggressive buying. Look for the rejection on the lower time frame. I didn't even look at it. That could have been another trade entry for me right there. Come on, move this down. Move it down lower. Come on. All right, right here, demand zone right here. Let's mark that in green. Why? Because, okay, let me show you this here because this is an example I can use, okay, about the gap avoid. All right, so look, all right. So you see where it made a high here, high or low. This swing right here, the small little swing, pushed up, bearish candle, break to the upside, aggressive buying. The candle that took out that last red bearish candle was this green candle right here, okay? Now, if we mark, I'm just going to take some arrows, the top end, again, how I talk about, of that bearish candle, and see the next candle, this candle here, closed above that red bearish candle, okay? The next candle closed above did the wick come back and touch it, immediately back to this area, okay, as it was forming? No. So we have a gap from here, that red candle there to the bottom of that wick on that next candle that broke above the red candle here, this candle here. So we got the closure above, the next candle that formed didn't come back. That's the gap right there. That makes this zone high probability. Why do you think it rejected there? Not only that, but it had an imbalance within the zone, okay? So I'm getting a little excited. All right, so sorry guys, but anyways, green, that's a high probability demand zone. Let's get rid of the blue one. All right, high probability demand zone. The gap avoids right there, okay? Look for the rejection of lower time frame. Where are you going to take it to? Up here. To feel at least this imbalance right here, and then maybe hold a contract to break above. I missed it. That was a golden trade right there. Look, what I just showed you right here, the high, the low, the breaker structure above, as the market continues moving higher and higher and higher, that's what we're looking for. Supply and demand works great when the market is trending. Right now, we're trending to the upside. We are breaking structure to the upside on the higher time frame, as you can see. Okay, so it's taking out, if you look, okay, we made a new high. So I talk about this in a couple videos prior to. This is a major structure break. Do you know why it's a major structure break? Okay, because it actually broke and took out the high of today, okay, and broke areas of structure as it was moving higher into the prior session, okay, or the prior session, say Friday, whatever case is, it was breaking higher. So there was a high right here from the prior session. There was a low right here. This was the high for today's session right here, but this was a high that was created into the prior session. So it formed a swing, pushed up, higher low, broke structure, took out the high, took out the swing high in a prior session. So we broke major area structure. So when we're breaking major area structures, those are going to be definitely high probability setups. And that's what this was right here. Study it, practice it, look for things like that. The market is still breaking structure to the upside and making new highs. So what are we doing? We're still breaking major area structures because we continue doing what? Making new highs into the session. High here now, higher low, demand, rejects. What does it do? Breaks higher, okay? It breaks higher. So right now there's really no area of demand. I mean, because we got this choppiness at the breaking above here at 351. So it does, makes a high, pulls back, makes a higher high, pulls back, makes a higher high. Now, take a look at this. This is not a high probability setup, but it just broke and made a new high to the upside, made a structure break, okay? Okay, but we have an imbalance here. So we can mark this area. Let's mark that because it's a possibility it could come back down there, reject it, and we could possibly look for a low. A long. I'm sorry, guys. So I'm going to mark this with a purple magenta box. I know you guys are loving this breakdown that I'm giving today. And if you are, please smack that like button for me. Click on that like button if you are loving the way I'm breaking this down, talking about it. I'm trying to get you guys, just inspired. I'm trying to get you excited about what to look for, how to trade it. Trust me, if you practice this stuff over and over again, you are going to be successful, okay? I can't guarantee anything because you've got to do it for yourself, and you got to believe in yourself. You got to show consistency. You got to be patient. That's the key to it all. But you have to take the best setup opportunities. That's what it's all about. Now, let's mark this zone in a magenta color. All right. Why? Because it's well, let's see here. Let me really take a look at this here. Move this box out the way. Okay, no, actually this was a high probability setup right here. Okay, I missed it. All right, because it's a small little imbalance or gap that was not imbalance. I'm sorry, small little gap or void that was back at the demand zone. Okay, I missed it when it pulled back. This was a demand. This was a high probability zone. So that was green. Why are we marking it magenta? Okay, because it was a void or gap back at the demand zone. So I'm marking it green. Okay, if it was not, but we still had, and the gap of void was already filled in as it pushed up here and came back right here. You see that the bottom here, that this candle right here, it almost came back to the demand zone, but it didn't. Had it did that, then I won't be marking this green. I would have marked the magenta because it would have made a low probability setup, but I still would have marked the zone because the fact is we have an imbalance resting at or inside the zone. Can the market come back and test that imbalance and still reject? Yes, it can. Yes, it can. So let's see what happens when it does come back there. Will it reject it and then want to push up and take out the highs? If it rejects this area, gotta pay attention to the price action, but if it rejects this area when it comes back down here to this imbalance, okay, then we could be looking for another higher high. Let's see what unfolds, okay? All right, so you have to be careful here. I mean, the market is, okay, so let me break this down. All right, I mentioned this, I marked the zone. This is a demand zone. I said pay close attention to price action as it gets back here. Okay, so when it made the move to the upside here, it broke this through this area structure right here. So we had a push down, pull back, and break lower. It rejected this demand zone, but be careful because it's only going to probably test this area within this area right here because now this is an area of supply right here to where the market may possibly could try to push lower. We just don't know yet, right? But we have to be careful because when it tapped this demand zone right here, it's only going to test that area of supply right above and before it rejects and decides what it's going to do going forward. This is on the higher time frame. So could you have traded this area here at around 1030 on the, let me get over here on the NASDAQ 100. Let's take a look. This is that area right here. Let's see, pull back to an area of demand. Let's see. Possibly so. I mean, you could have. At least I would have been looking to take it back up to this area here around 66.5, maybe slightly higher. But just be careful. So looks like it may try to break higher. Okay, so pull back here. It may try to come up here and break this area now. Be careful though, because we're moving sideways. We have a high and a low here, and we have a demand zone and a supply zone here. So we're moving sideways in between two areas or two zones and within this leg right here. So be very careful about which way you trade. Yeah, so there was opportunity to get into a longator here and taking it back up to the high, but if you came down here, like I said, got to trade down here, be careful of this area. It pulls back. It's already tested this area, so on a pullback, maybe let me see, 1043, somewhere in this area here. Well, there we go. It breaks higher. Well, so really the opportunity would have been right here. There's a little area of demand right here coming off of that higher time frame demand, bounced off of it, push back. You see this candle right here? This candle right here closed above this last red bearish down candle. The next candle, it comes back down to the demand area. The moment it closes above, you can look for an opportunity to automatically go long, okay? So you could do it that way, or let's see here. That would probably been how I would have traded that, to be honest with you. I mean, possibly you could look for a pullback, but either way, I mean, this would have been the opportunity to try to look for a demand setup to go long, okay? And we're going to, where you aim for, the break above the highs here. So just imagine if you would have got into the trade at the break above here at 359, and you held it through, okay? Above 88, 89, I mean, around the 87, 88 area. Beautiful trade. Now, I missed that one, okay? I stepped away from my computer. And, you know, primarily I'm done for the day because I've already taken a few nice trades. So let's see what we got going on now. We just broke structure again to the upside, all right? Now, I don't see... Oh, actually, yep. There's a demand zone right here. Let's go ahead and let's do this. Let's bring this one up here. Another demand zone. This thing is throwing demand zones back to back today, so these are beautiful trade entries, okay? If you're using this scalping strategy the way I do, you can catch trades on the daily doing this. All right, another demand zone here. Why? Pullback, break structure above this area here at 88. Okay. Now, like I said, there's a demand zone right here at 73.5. It can come down and test this imbalance at 72.25 if it chooses to. So it broke above what I say, 88. All right. So it was above this area here. Looking at the lower time frame, could it come down here to this area here? Yeah, it could. Could it reject this area? It could reject here. It could possibly even reject here. Or it could come back down here, even down here around 62.25. Let's see where that would be. Yeah, it could pull back even lower within the demand zone. So let's mark the zone here on the higher time frame as well, because it is a demand zone. All All right, right here. Whoops. Okay. All right, we'll do this. Green. All right, let's see if it's going to pull back there. Okay, at some point it probably will. Let's look to the left-hand side of the chart to see where it's at. Okay, so let me take a look here. All right, so it's testing this area of supply up here around 400. That's a round number too, so the market can definitely bounce where we're at now. It's testing that area now. So could you look for an opportunity to go short? Sure, you could. Back down to this area of demand if you chose to. But just know how to trade it the correct way. So on the higher time frame, if we go over there, the left-hand side of the chart, always talk about looking to the left. This is a supply zone right here. Okay, we're also at a round number 400. If I see any means of a supply setup that now forms on my lower time frame, I would be interested in looking for a setup to possibly take it back down. And looking at my higher time frame, again, using my higher time frame as a reference guide, maybe back down to this area of supply. Demand right here, okay? But let's see, because it could break. It's at 10, 11, trying to test 12 area. Still in that area of that higher time frame supply zone. So it could reject here. Definitely more so could reject here. Now we could get a break below, a break below here at 404.5. Be a small break of structure below, pull back, boom, go short. But we'll see if this thing is going to give us a opportunity to do so, or is it just going to continue pushing higher. So that I got to be mindful of. 87. Yeah. Let's see what happens here. I'm going to wait it out. Maybe I can get into one small little trade before I close the video out. But I'm doing this type of videos to help you guys out, and hopefully you understand, what I'm looking for, or what I'm looking at as well when I'm taking these trades. So please pay close attention. You can do this on the daily and make a full-time income, trading from the presence of your home or office space or wherever. Okay? So I just want to share this with you guys. A lot of you are already found success and understanding and grasping the way I trade and incorporate it into your own trading. And I am so stoked about that and excited over on the Discord community that a lot of you are finding and seeing the light. A lot of people are saying they have been struggling for years, and they are now able to use and found a simple strategy that has, it's been working for them. You just got to practice it, okay? The key is patient, looking for the right setup. Stop trying to take every setup under the sun, and not every setup is a good setup. And not every setup is going to work. When that does happen, you need to know when to get out to protect and preserve your capital, all right? So you can't get frustrated and say, oh, the strategy doesn't work. Strategy works. Trust that. Be patient. All right, so we are, let me get back over to my NASDAQ. We are, what am I trying to say here, guys? All right, so let's see. Pull back a little bit here. Yeah, I like what I'm seeing here, but it didn't pull all the way back here. A few ticks away. Slightly break structure to the downside here. If you have a hard time seeing structure breaks, guys, and see it, man, this thing is getting on. It's aggravating me. Yeah, broke structure to the downside. You could use a line chart. I'm not saying trade from the line chart. This video is getting on my nerves on this webcam thing. Anyways, okay, so I tested it here. All right, if we get the break below, I'm going short. We'll see though. Be mindful. This is an area of demand resting right here, so let's see what she does. Let's see what she does. That's all we can do, right? All right. So, going to be mindful and be patient at the same time. Okay, that was this morning. All right. Okay, so maybe we'll break it now. Oh, there we go. Let's see. Did it break below? Let's see, pull back. Hammer to the downside. Broke below. I'm interested in going short. I mentioned that, right? Yeah, I'm going short. Ain't no doubt about it. I'm going to take this short entry. Okay. I really want to down here around 392. And I know I can run lower than that, guys, but I'm just going to just show you for example here. Try to fill in this imbalance right here. It's going to be my goal, my aim. And that way it'll allow me to pick up. It could pull back, I know that for sure. If I get filled here, it'll be a 10-point pickup, I believe. Yeah, 10 point and a quarter, 10 point and a half, something like that. So there we go, filled just that quick, boom. All right. Okay, I mentioned, that we were testing that higher time frame supply area on the 60 range chart, as well as it was around number 400. So you have more confluence there. Okay, so will it come down here and test this area of demand? It's a possibility it could do so, but this is right here where it's bouncing. You see it bouncing a tick. This is support right here, so be careful because it can reject this area. But there is demand here. Typically, when we have areas of demand like this, it likes to come back and test those areas as well. So, but it's bouncing off that area of support there at 387. Okay, so let's see what happens. Let's see what happens. So this is my trade right here. I'm going to mark that area of supply so people can understand what I'm talking about here. Where was it at? Right here. And I'm not sure if I can carry this forward or not. Maybe allow me to. Trying to see if it'll allow me to, this auto scale. What does that do? No. Trying to carry it to the right side of the chart. I'm not sure if it allows you to do so. Anyways, I'm not worried about that. So what we'll do is, oh crap. Yeah, let's, okay. I'll drag it like this, it's fine. This is from a few days, actually this is from November the 29th, okay? So this was an area of supply on the higher time frame, okay? And I'm going to move it on all charts just for example, okay? All right, so now we see that area right there, right? Now, again, higher time frame supply, okay? Mark the zone. Now what do? We want to simply, let me go back to my lower time. Okay, here we go. My higher time frame, my lower time frame. All right, look for a supply setup on the lower time frame. Simple as that. Little supply area right here, okay? Pushed up, small areas, broke structure right below here at 4.5. Pull back where? Small little area supply right there. And I mark my zone as simple as this right here. Let's see here. Yeah, mark the zone right here. Okay, that's the zone. Go short. Okay, all right, boom, pull back. I'm short. Okay, and where's it going? It's going to that area of demand on the higher time frame, in which I talked about. I believe it is. Let's take a look. Boom, there we go. Look how pretty that is. Beautiful. Down to the demand zone. Okay. All right, well, guys, I mean, I'm telling you, this stuff works if you really, really understand it and trade it. Look, if you really want to grasp and understand and understand trades like this, I highly recommend that you come over and join the Elite Channel membership. It's $6.99 a month if you choose to. It's just your way of supporting me as a content creator, but what you receive are my trade breakdowns. That's what I'm getting at, where I go into depth about trade entries, what I'm looking for, why I look to the trade, profit target, things of that nature, where you can see me, where I go in the detail and talking about the trades I take as if you're sitting right next to me. My mindset, okay? I'm laying it out there for you, okay? Plus, you also get the video playlist, so you don't have to watch 600 and some videos. I selected a group of videos and put them in links, okay? All right? For the Elite Channel members within that community, that private community, to where they have access to those videos. $6.99 a month, or you can go over and pay a few $100s or a few $1,000s for somebody's trading course, okay? Now, I'm not an instructor, I'm not a trainer, I don't have a trading course, but I'm just providing these educational videos in a sense because I want to see people succeed, okay, guys? That's simply all it is, all right? So, and if you don't believe me, come over to the Discord community. That's free of charge. Click on the link down below. Come over and ask some of the community members, how many of you have signed up for Mike's Elite Channel membership program, okay? You're gonna see many of them have. I mean, you're gonna have responses and see that, hey, I recommend it, whatever the case is. Not trying to toot my own horn. I'm just telling you guys that it's there. The information's there. There's a lot of value in the content, but you got to spend time watching the videos. Now we're tapping into a demand zone here, right? What can happen? We can push up. Let's see if we get rejection on the higher time frame. All right. So we look for a demand setup on the higher time frame. Mike, what were you looking to be taking the trade back up to? To at least this area here at 97.5. Beautiful trade setup, okay? All right. All right, so it broke to that area of demand. So be careful, okay? It's going to test this area. It did test that area, and it could break below, okay? Now, right now, it's kind of like, all right, I don't know, you know, it's one of those things that we just want to kind of stay out of the market, okay? It could, let's see. Okay, let's see what we're doing here now. Breaking here. We're breaking below this area structure right here below 348, okay? And it could break below here. Now, if it breaks below here and say, for instance, pull back, what could it possibly do? It could definitely push lower and test down here, probably down here around 312, okay? So it could do that. So meaning it could break below this area structure, pull back to maybe here, or I would be looking for the better opportunity, maybe up higher up where the move started from, this aggressive selling started at, back up 397. If we get there, and maybe look to run lower. So, but you know, we are starting to break structure back down to the downside. Is this a major area structure we're breaking? No, this is minor. Why? Because see this leg that is pushed to the upside right here? This is all within today's session right here, okay? So we're taking out structure back down to the downside within today's session, so this will be minor structure breaks, okay? And not until we actually take out a major area structure, which would be the low of today, and then say it does something like this right here, or it does this. Breaks lower, breaks below the area or the low of today, pulls back. This would be a lower high. To break lower then it would be a lower low. So we have a structure break to the downside. Break structure, pull back, break lower, major area structure break when it broke below here, okay? Then it pulls back and breaks below, another major area structure break. So when we take out today's low, say for instance, and start breaking through areas of structure to the downside, making new lows, then we have major area structure breaks. And if we start as well taking out areas of structure in prior sessions, that's still major area structure breaks, okay? So be mindful of things like that as well, okay? So I'm not sure what's going to take place here, but all I'm going to say is I'm done for today, guys. I've shown several videos. I went over the strategy, how simple it is to use scalping the index or indice futures, okay, on the daily. And in supply and demand is universal. It's not about just trading the index or indice futures. You can trade any market with it. Forex, options, it does not matter, okay? I'm pushing and pumping these videos on the daily. Why do you think I spend so much time in my own life? 600 plus videos, okay? That's a lot of time, a lot of valuable time that I spent in doing this stuff to pass it forward. That's my goal, is to pass this forward because I want to see people prosper and become successful in doing this just as I do on the daily, okay? I want to curve that edge for you so you don't have to spend 2 years or 3 years. It took me 2 years. Some people may take longer. I've heard people taking 4 or 5 years and plus to get to where they want to be in their trading career. But the thing about it is don't give up, okay? So look, do yourself the favor right now, okay? I'm going to give you 5 seconds. Click on the sub button. Click on the subscribe button down below, all right? Also, click on the bell next to it. Turn on all your post notifications so you never miss one of the uploads. And if you found value in this video, please do yourself a favor. Drop a like on the video. That way other people can, this video here can get pushed out to other people that can become inspired. Share the video below as well. Click on share it with your family, your friends, whoever, co-workers, it doesn't matter. If you're interested in joining the Discord, find that link down in the description portion of the video. Click on it, invite yourself in. It's free. Come over and join us, okay? All right, got questions? You can hit up the general chat channel on the server. Or if you want to come over and share your trades, go over there and on the trading floor channel on the server and share your trades. But please, if you're interested also in joining the Elite Channel membership, which is a membership program through YouTube, all right, you're supporting my efforts as a content creator by me making great content like this, but you also were getting perks and rewards back. $6.99 a month. Guys, most of you spend that every single day or more on the price of a cup of coffee, okay? So would you rather spend that on the price of a cup of coffee, okay? Or would you rather spend $6.99, which is $7, okay, a month, okay, to transform your life into you know, from maybe you were struggling trading to where you can be consistent and profitable. I'm not guaranteeing anything because first and foremost, you got to put the time in. You got to understand one and grasp and master one key concept. All right, which to me is the most ultimate or the most important element in trading: market structure. That's being able to read and understand what the market is truly trying to do. Okay, and when you do that, I always say you're 90% or more there. The rest of it is really working on your inner self. Okay, if you're struggling with some type of psychological point or issue, because there are major parts to the psyche, to the mind that we have to control when we're in this business of trading: fear, greed, you know, revenge trading, and there's a whole lot of other things. If you struggle with that, then you need to work on yourself before you start putting your own money on, and risking things on the line. That's what I'm trying to say. Practice makes perfect. Trust me. But that's all I have to say in today's video, guys. But again, if you're interested in joining that elite membership, click on the join button. You'll see it right here on the video, or you can also find it on the YouTube channel homepage. Join. There's two tiers. You got loyal channel supporter, the elite channel membership, $6.99 a month. That's where you get everything. That's where you get the trade breakdowns. That's where you get the video playlist. People have found so much value in the trade breakdown. So I'm just throwing that out there to you. But anyways, I wish everyone a successful and safe trading day. See you in the next video. Take care.